Picture this. It's the first week of July. You lodge your tax return, the refund lands in your account, and you spend it. Maybe on a bill, maybe on something nice. Then months later, the ATO quietly matches up some income you'd forgotten about, amends your return, and pulls that money back out of your account. If that thought makes your stomach drop a little, you're not alone. And the good news is it's completely avoidable. Today, I'm going to walk you through the exact checks to run before you lodge. Here's why getting it right the first time matters so much to you. The ATO says most online individual returns process within about 14 days, but if there's a mismatch or an error that needs a manual review, that can stretch out to up to 30 calendar days, and it's not just your refund that gets held up. That delay also holds up any flow-on Centrelink balancing you're owed for family tax benefit or child care subsidy, so a rushed return can cost you on more than one front. Step 1 is simply patience, and if waiting feels counterintuitive, that's totally understandable, because everything about tax time makes you want to get it done. But most third-party data only becomes available to the ATO in late July, which is exactly why Services Australia recommends you lodge from late July, so most of your information is pre-filled and you avoid mistakes. Here's what to do. Log into MyGov, select ATO Online Services, go to your income statements, and confirm every employer shows the status tax ready before you even start. And here's the part most people miss, that one status check is what stops the whole clawback problem before it begins. Let me show you what this looks like in real dollars, because the numbers make it click. Say you're a salary earner and you forget $1,200 of bank interest that turns up in the pre-fill later. If you're on the lower end, around the 32% bracket, that's roughly $380 of extra tax. In the middle, the $45,000 to $120,000 bracket at 34.5%, including the Medicare levy, that's about $414, and if you're a higher earner around 39%, it's closer to $470, all assessed after you've already spent the refund. Step 3 is the reconciliation, and now I want to be upfront with you. This is the bit that takes a little real effort, not a one-click fix. The discipline good tax agents use is to match what the ATO is likely to see. Your interest, your dividends, and any other third-party reports should line up with what you lodge. In My Tax, review the pre-filled income sections, then download all your bank and investment statements and add any account that hasn't reported yet, so your total is equal to or higher than the pre-fill, never lower. That single habit keeps your return clean. And here's where it gets genuinely important, because this isn't a one-off. Imagine you're on $80,000 with $20,000 in savings, earning $800 in interest and $1,200 in distributions. If you quietly miss $2,000 of income every single year, that's about $690 of back tax annually at 34.5%, and it compounds to roughly $13,800 over 20 years before any interest charges or penalties. That's a real holiday, or a decent chunk of your mortgage, lost to a habit you didn't even know you had. Step 4 is about your private health cover and your dependents. Your insurer usually sends you an annual tax statement in July or early August, so wait for it before you touch this section. In the Medicare and private health insurance part of My Tax, enter your health insurer ID, membership number, and policy details exactly as they appear on that statement, and make sure every dependent child is listed. Get this right, and your rebate won't get adjusted later against the insurer's data. And here's the number that actually matters next. The 20-year cost of one lazy deduction claim. The last step before you lodge is your deductions. And if you've ever guessed at a figure here, that's not a moral failing, it's just how most of us were taught to do it. But claiming work expenses without records is one of the most common errors the ATO sees, and if a claim gets disallowed, you owe the tax back. On $1,000 of unsubstantiated claims, that's about $345 a year, or $6,900 over 20 years. So the rule is simple: only claim what you can actually prove with receipts and logbooks. Now let me bust the biggest myth in tax time. Most people think lodging as early as humanly possible in July gets them their refund first and fastest. It feels smart, it feels proactive. But Services Australia is genuinely clear on this. The best time for you to lodge is from late July, when most of your information has already been pre-filled. That's what helps you avoid the mistakes that trigger amendments and clawbacks in the first place. Waiting a couple of weeks isn't slow, it's what keeps the money yours. Before we recap, let me flag the 3 traps that catch people out most often. The big 3 are forgetting to declare your bank interest or investment income, claiming deductions without proper records, and entering private health details that don't match the insurer's statement. If you get any one of these wrong, you may have to amend your tax return and lodge it all over again, which is exactly the hassle we're avoiding. So it's genuinely worth slowing down for the last 5 minutes before you hit that button. So here's your rapid recap that you can run through in a minute. Wait until every income statement is marked tax ready. Understand that lodging too early risks an amendment and a clawback. Reconcile the pre-fill against your own bank and investment records so your total matches or exceeds it. Match your private health and dependent details exactly to the insurer's statement, and only claim deductions you can back up with real evidence. 5 checks, and you've protected yourself from the most common tax time headaches. If you've made it this far, you now know something most people lodging in early July simply don't, and that's what keeps your refund yours for good instead of getting clawed back down the track. Your next step is easy. Log into MyGov this week and just check whether your income statements say tax ready yet. It takes about 2 minutes. If you want to go deeper, the tax deductions most Australians miss is exactly what we cover next. I'm Sophie. I'll see you there.